Hi, everyone. I'm Jeanette Mulvey, the editor-in-chief of Co. by the U.S. Chamber of Commerce. I'm so excited to welcome you to a special edition of Co. Start, Run, Grow, focused on helping you navigate this year's upcoming tax season. Today, you'll hear from experts about the things you need to know while you file your 2021 taxes, including changes to pandemic-era programs and how they will impact your taxes. You'll also learn how you can manage your data to streamline your tax filing process next year and in the future. You can ask questions of the speakers and engage in our polls throughout the program. You can do that by just using the tab on the right-hand side of your screen. Before we get started, I want to thank our event sponsor, Iron Mountain, as well as our series sponsors, Dell, FedEx, MetLife, and Oracle NetSuite. We appreciate your partnership in this series. We'll start today's discussion with a conversation with two small business accountants who happen to be entrepreneurs themselves. I'd like to welcome Manny Cosme, President and CEO of CFO Services Group, and Keela Hill Trawick, founder and CEO of Little Fish Accounting. Hi, guys. Welcome.
Hello. Thanks for having us.
Yeah.
Hi.
Thanks for joining me. Hi. So I'm going to start with you, Keela, and audience, don't forget, if you have questions, you can type them in the right-hand side of your screen. So Keela, my first question to you is, can you just provide an overview of the changes to this year's tax law that, given the grants and loans and tax credits that we saw rolled out during the pandemic?
Yeah, so I would say in the big scheme of things, there aren't a lot of major changes. So most of the things are going to be that grants are still taxable, that you need to make sure that any income that you receive, that if you don't have a form for it, you're still accounting for it properly. Some people got PPP loans that still haven't been forgiven. So just making sure that you're accounting for those properly. But in the big scheme of things, making sure that you're tracking your information appropriately, that you're not taking expenses that aren't deductible or categorizing things improperly that would understate or overstate your tax return are going to be the big things to pay attention to this year.
And when you say that people have PPP loans that haven't been forgiven, you don't mean that they can still file for forgiveness. You just mean that they haven't received that decision yet?
I would love for that to be like a super straightforward answer. For the most part, you should have already applied for forgiveness.
Yes.
Some of the banks have had these extenuating circumstances where maybe you put something in and either they didn't approve forgiveness at that time and you have some kind of appeal, but your bank or financial institution that sent out your information should have already given you everything that you need to know your deadlines by which you should have applied for forgiveness and what the next steps will be.
Great, thank you. Manny, a similar question for you. What kind of changes to relief programs during the pandemic are impacting your clients this year?
Well, first of all, happy tax season, everyone. Yes, it is the most wonderful time of the year for us accountants. So everything Keela said, I absolutely agree with. Make sure that PPP obviously is the big one that's always has been on everyone's mind for the past, hard to believe, 2 years now. So yes, making sure that you have asked for the forgiveness and making sure that you're not going to be taxed on that forgiveness, because remember, this was some relief given to you by the federal government, and they kind of went back and forth in the beginning, and well, it's going to be taxed. No, it's not going to be taxed. We're not sure. And then it ultimately landed on it's not going to be taxed. So, I mean, some of us got really substantial PPP loans. So make sure that that's not included as part of your taxable income. Otherwise, you're going to be hit with a pretty, steep tax bill there. I also want to just mention on the tax front, not necessarily income tax front, but if you remember early in the pandemic, Congress allowed you to defer your unemployment and your employer taxes from your payroll. So if you did do that, also make sure that you're paying that as well, because that is actually come due. The first half of that payment was actually due back in December, and the second half is due at the end of this year. So along the lines of taxes, make sure that you're also paying that.
Okay, that's good advice and something for our audience to remember. So Keela, your clients are small businesses and they're experts on everything probably but paying taxes. So how are you explaining these changes to them? And what's just your top level advice to your clients going into this tax season?
I think one of the most important parts that people miss a lot is that correct bookkeeping and tracking and support documentation is really the foundation for a good and easy, or at least fairly seamless tax return season. I think a lot of small business owners assume that your tax return is kind of this black hole where you just throw all of your stuff in and then it gets mixed up and your tax preparer just kind of throws out whether you owe money or not. But that's really dependent on all the things that you're doing throughout the year. Are you tracking your income and expenses properly? Are the things that are supposed to be on your P&L there and the things that shouldn't on your balance sheet? So do you have some type of accounting system to be able to track that? Are you making estimated payments throughout the year to avoid surprises that will come when it's tax time? So what we really try to focus on at Little Fish is this reminder that your goal is to prepare throughout the year, that tax season is an ongoing experience and not just at tax time, because otherwise it makes it really stressful for you suddenly to have to get all of your paperwork together to give to your accountant or tax preparer.
Manny, sort of a similar question for you. What kind of advice are you giving your clients this year for filing and maybe more generally every year in terms of how to prepare and what might be unique about this year?
Yeah, I mean, definitely making sure, echoing the sentiments there, making sure that you're keeping up on your bookkeeping records on a regular basis. Because remember that your tax professional, if you are using someone to file your taxes, a professional, they may not necessarily be looking over your books to make sure everything is accurate. Their job is to get the filing done with the information they've been given to them. So really making sure that you're providing them with that accurate information so that you do have a filing and you don't overpay your taxes, which of course no one wants to do. Definitely making sure that you're keeping those records up to date. And of course, as Keila said, also using that then to meet with your tax person on a regular basis to do strategy work around that to make sure that there are no surprises come tax season as well. No one likes tax surprises for sure. So making sure that you're really keeping those records up to date is of absolute importance. You do not want to be scrambling at the end to get all this information together.
Yeah, I think you make a good point about meeting with your accountant during the year. I think most people think of that as, they see you once a year and then they like to not think about it. So I think that's a very important piece of advice. To that end, Keila, what kind of process do you have in place to keep in touch with your clients throughout the rest of the year? And what kind of advice do you give them for making sure their books are accurate and up to date and reconciled throughout the year so that they're not scrambling to do that at this time?
I would say one of the things that's different about our tax process at Little Fish is that we don't do standalone returns. And so in order to do taxes with us, we have a year-long relationship where we're estimating and paying your quarterly taxes. We are doing these tax planning and strategy sessions twice a year and filing your annual tax return. So even if you are not working with somebody that does all of that for you, make sure that you're making that part of your tax experience. So throughout the year, make sure that, to Manny's point, you're keeping up to date with your books so that you can file your estimated taxes, or pay your estimated taxes rather. Your accountant hopefully is available for you to sign up with some type of consulting call, either in the middle of the year or toward the end of the year, hopefully both, where you can ask questions. A lot of people have questions outside of tax season, anything from, I saw this online that it should be deductible to me. Is that applicable to, my spouse or partner has a new job and how should we account for taxes that way? So having a resource in your pocket throughout the year is going to be really helpful. One of the other things that we do is provide checklists and resources. So for example, when we do estimated taxes and we say, are your books ready? We have a checklist that says, here's some things that you should be on the lookout for, because to Manny's point, we don't take responsibility for your bookkeeping. We rely on our clients to have their numbers in order. And so we just want to give them a little bit more information towards making sure that that's accurate, because you're right, they're experts in a lot of stuff, but it's hard to know all of the things that should happen for them accounting wise.
Mm-hmm.
Keila, you just said something that I wanted to highlight. You said we don't take responsibility for your bookkeeping. And I think a lot of new business owners might think that an accountant and a bookkeeper are the same thing. And especially if you're a very small business and you don't have a full-time bookkeeper on staff. Can you just talk about the difference between an accountant and a bookkeeper, and whether a bookkeeper is another person you can outsource some of your financial work to throughout the year in addition to your accountant?
I will start a base explanation, and then Manny, you fill in where you see it. I would say, I think one thing that gets misconstrued is that an accountant is just an umbrella term for people who do accounting work. Your accountant is not necessarily a CPA. They are not necessarily a bookkeeper. It means that they do accounting. A lot of times when you hear accountant used, they will be referring to a tax accountant, but that's not necessarily the same. So first of all, ask the person that you're going to work with what they do, and what they're responsible for. And then for us, bookkeeping is the day-to-day of keeping the books up to date. So you are recording and categorizing your transactions in the right place. You are preparing your own financial statements, if that's what you're using, hopefully, or your spreadsheet. Like, you are responsible for saying these numbers are in the right place. And then your tax person should be taking that information in order to input and prepare your tax return, looking for any flags, obviously, but not being responsible for what those numbers mean. So on our end, we make sure to tell clients, because we're not responsible for bookkeeping, the onus is on you to either be confident enough to do your own bookkeeping or hire a bookkeeper. There are plenty who will do it for an affordable price, so that it's one less thing that you have to have on your plate. Manny, I know you do all of the things too. How do you all break that down?
Yeah, I would say the same thing. And in fact, I'm going to throw a third one out there, which is your CFO. So in my company, CFO Services Group, we actually don't do the tax prep work. So we're accountants, but we're management accountants. So we don't do the tax prep work. We do, of course, play a role in the tax process, making sure that the books are updated and everything. That's our bookkeeping side of our house. So we do the bookkeeping, but we also do the CFO strategy side of the house as well. And that's where we're looking at your total financial picture and then working with our fellow bookkeepers and tax accountants to make sure that you really are also getting the proper tax filing done, that there are no surprises down the road. Like, so for example, as we hit towards the end of the year last year, we started, as a CFO, started getting to tax discussions with our clients and talking to their tax accountants to figure out how we can start maximizing their deductions so that they're using their cash wisely and not hit with a big tax bill at the end of the year, right? So these are the discussions that collectively, really the three of us start getting involved with: your tax accountant, your bookkeeper, and your CFO.
Actually, Manny, you took me right to what my next question for you was going to be. So I'm just going to ask it, which is, what are some of the biggest surprises your clients are seeing this tax year that maybe they weren't quite prepared for?
Some of the biggest surprises, well, definitely the PPP, making sure that that's, being done properly and that you're not going to be double taxed and all that. And of course, all the grant programs that came through and all of that, that's really specific, to this year. Just making sure that all of that was happening. But really, other than that, there's not really too many other surprises, I would say. It's kind of just business as usual when it comes to taxes, just employing good tax strategy, making sure that you're paying your estimated taxes, making sure that you are aware of what your tax liability should be. That should really never, ever, ever be a surprise to you as to what your tax liability is going to be come your filing for this year. So other than those nuances, I would say it's pretty much business as usual.
Okay, great. Keela, same question for you. Are your clients are there just anything that's catching them off guard this year that's a little different than last year?
I would say not necessarily. One point I'll make here is that I think because of all of the changes that happened in the past 2 years, people kind of expect that we've got this ongoing list of and here's a new thing. Those past 2 years were really anomalies. Taxes for a very long time have relatively looked exactly the same. And so, to Manny's point, to some extent, we're kind of returning back to the before times where there are not a lot of changes. You're treating your taxes as you always have. I wouldn't say it's a surprise, but one of the things that we noticed a lot last year were a lot more new business owners. So people who had just started businesses during the pandemic or were growing a business during the pandemic and just started getting accounting advice. And while I wouldn't say it's a surprise, I would say that it really did open up a lot of people's eyes to the idea of how much accounting assistance and tax assistance that they needed. I think without the information that has been coming out of your social media or all of these other platforms that kind of seem like you start a business and then you just kind of do the thing, I've definitely seen a lot more information, good and bad, that really leans new entrepreneurs towards understanding just how much of a foundation they need in that area.
Yeah, I think that's really
Actually,
interesting. We didn't talk about the startup boom. I think that's key. Manny, what were you going to say?
Actually, I did think about one thing actually that is an important thing to consider though. And actually, Keela and I were just talking about this right before we started here. It's because a lot of businesses have gone remote in the last year or two. That is actually something that people should be thinking about and talking to their tax accountant about, is making sure that you understand the states that you now have to file in. Because if you have employees now across different states, there is a possibility that you may need to be filing tax returns in those states as well. So making sure that you're really discussing that with your tax person so they understand your situation. That could be a change in the last year or two.
Yeah, that's a really good point. I want to go to some audience questions because we have a few about the employee retention tax credit. Now, that is something that you could still claim. So I'll go to you first, Keela, and then to Manny. Do you have any about the employee retention tax credit? Is that something people are still dealing with now?
I mean, they're still dealing with it because the payments haven't come back yet. It is taking them forever. I've seen people who, applied for several quarters before or had to make an adjustment and got later submissions before they got those adjustments. So, I mean, this is probably a common theme, especially when it comes to the IRS and taxes. To some extent, you're going to have to be patient, or you have to be willing to talk to somebody on the phone and wait for hours to get somebody to give you a status update. I would say the other thing about that is to remember, and Manny brought this up earlier too, make sure that you're categorizing that properly in your books, because you can only take a deduction once. And so if you took a deduction for money that you paid employees and then you got the retention credit to offset that, that's essentially income.
Manny, did you want to weigh in?
No, same. Yeah, exactly. Yeah.
Okay. We also have a question here about finding a good bookkeeper. Do you, either of you have advice on that topic? I know, Manny, you offer those services, so I'm sure you can speak to that, and Keela too.
Yeah, I think kind of the fundamental first is understanding the area of expertise of the person you're speaking to. I think first and foremost, that's kind of really important. Just making sure, are you talking to someone that focuses more on tax, more on bookkeeping, more on CFO work, because you're more on audit, right? There's many different flavors of accountants, as we kind of said earlier. So really understanding what is in the wheelhouse of that person so that you're really getting the best service. Other than that, also understanding, do they specialize in any industries, any particular business size? And I would say more than anything, probably understanding business size is probably the most important thing. You do not want a bookkeeper who specializes in working with multi-million-dollar companies if you're a brand new startup company. It's just going to be a very different experience that you're going to get and different levels of information that you really need at this point. So someone who understands what level of business you're at is super, super important.
Great. And Keela, same question.
Yeah, I feel like we're the same. So one, yes, I agree with all of that. I think knowing your bookkeeper's industry is incredibly important and underutilized from a lot of people. I think there's an assumption that like all bookkeeping is the same. They're just categorizing things for me. But everything from how your chart of accounts is set up to how they are providing that information to tax preparers is really dependent on how much they know about what you do. The other thing that I would kind of pitch in here is how much hand-holding you need or how much interaction you need. There are some bookkeepers, like our firm is all virtual. Most of our interaction is email, and then we have really scheduled phone calls. You've got some bookkeepers that will text you all day if that's what you need. Just making sure that you're getting a person that works with you in the ways that you need to be worked with. It's not a good or bad thing, but you don't want to sign up for somebody who, never talks to you on the phone if that's what you need all the time, or somebody who requires that you get on the phone when you'd rather work through email.
Last question for you, Keela. The great thing about tax season is it's a chance to start anew on preparing for next year's taxes. I'm trying to put the most positive spin on it possible. So I guess, Keela, you first. Just any advice for someone who says, okay, today I'm going to start preparing for next year and make sure that I do things this year. I'm going to do it right so that it's not a giant headache when I file my taxes next year. What's your advice for that person?
I think depending on how this tax season went, it's really a good opportunity for you to start thinking about what you need. What felt hard for you this season? Was it that your books weren't in order and maybe this is an opportunity for you to look for a bookkeeper? Is it that you didn't have the right tax preparer for what you needed, or they didn't serve you in the way that you hoped? Is this the time for you to start a new relationship, or at least start investigating other firms to see if they can do a quote better job for you? I think this is a place for you to really figure out what you want to be focused on in your business and how you can delegate or receive help in those different areas. And a lot of times tax season is a good place to be like, this is where things went wrong or felt hard or didn't feel good for me. Who can I hire or who can I engage on our team to make sure that that's an easier process next year?
Great. Manny, same question for you.
I would say definitely, the challenges that typically you face is, I got to scramble and put together all my financial information. So building the habit of getting your financial information updated regularly is super important. I say really you should be going in and updating transactions and reconciling your books once a week so that you have good information. And just keep in mind that filing a tax return is the end result of keeping financial records. The real reason that you keep financial records as a business is not to file a tax return. It's to get good information for you to make good decisions in your business. That's really the intent. So building good habits to keep yourself having good financial information, that's what's super important. And if you happen to do that, then you happen to have a really easy tax filing season, right? So start with the intent of, I want to make better decisions in my business and I want good information to do that. And from there, it will all flow.
I think that's very good advice. We're going to do some more audience questions in a minute, but I'm going to let you two catch your breath because we're going to do an audience poll. It's just always interesting to see who is actually in our audience and where they are in their entrepreneurial journey. So the question we asked was, how do you handle your business taxes? And we can see here that more than half of respondents hire an external firm, which is not entirely surprising. Very few have an in-house person, which speaks to, I think, the resources available to most small businesses, especially since we know we're in the startup boom. We have a lot of very small startups. And where we say, I do it myself, I assume that those people and the tax filing software people are the same. If you're doing it yourself, you likely are using tax filing software. So that's interesting, though, because if you combine those two numbers, I do it myself and I use tax filing software, that's actually a pretty big number of people in the audience that are not using external firms.
Mm-hmm.
So that's very interesting and actually surprising to me. So let's do a few more audience questions. We have a lot. Okay, so we asked about the employee retention tax credit already. And Keela, this person says they applied last October and they're still waiting. And that doesn't, Keela, you said that wasn't surprising to you. What about you, Manny? Have you been experiencing the same thing from folks not having received that funding yet?
We actually have had very little clients actually qualify for the ERC. Interestingly, it's been a challenge. It was a little, the ERC. We could do a whole thing on the ERC. It was very interesting. A lot of them, just ultimately didn't end up qualifying. So I don't know if we even have maybe one or two clients. So I haven't really had much experience with that, to be honest.
I just want to point out something here too, because I think that it's important that we remember that the employee retention credit was a payroll tax and not an annual income tax. And so I think for us, the only people that it came up for were people that we do virtual CFO, payroll, all those things in. And even then we had to hire out to get assistance on the employee retention credit. So recognize that too, that your annual tax preparer, your income tax preparer may or may not have any experience with that, because payroll taxes are their own beast that I would say the majority of us want to stay out of as much as possible.
Yeah. So actually, now having just said that, I hesitate to ask you this question. And if you don't know the answer, either of you just say, but it is a common question here. So people are asking that, is the employee retention tax credit taxable? Because they're getting different information on that. Do either of you know?
It's taxable in the sense that they paid you back for money that you claimed as a deduction. So it's not new income. It's the fact that you said, I paid employees this much in salaries, wages, taxes, all these things, and they gave you some of that money back. So I would say it is taxable, not as a separate line. I think that people think of in terms of like this is another line of revenue. It's really offsetting or reducing some of the expense that you were allowed to take initially. So remember, if you can only take this deduction once and you paid for something, it's like really think of it like any other expense. If you paid for something and then somebody gave you money back for it, that's going to reduce how much you get to take as a deduction because you got some money to kind of
Sure.
offset
That makes sense. Manny's nodding,
Yeah.
so I don't know. Yeah. Okay.
Yeah,
Um,
which
this
is
is
different
also-
than the PPP, by the way. And I think that's where some of the confusion came in, because the PPP, you could also use that money, to offset your payroll costs, but it didn't reduce the deduction that you got. Yeah.
because they changed the rule.
Right. So kind of mind blowing, but yeah.
Yeah.
Oh, I would say just to like help make that distinction too, the PPP was a loan. So like any other small business loan, the idea was that you got the money and the benefit was when they said you didn't owe that loan back, you didn't have to pay it back. Whereas the ERC is a tax credit. It is actually an amount that's just for offsetting a tax amount. So that helps make that distinction a little bit clearer too.
Okay, good. I don't know that I fully understand this question, but I'm going to ask it of you guys. Basically, this person is saying they want to know if they can file their 941X themselves.
Oh, a 940. Well, 941. I mean, we do payroll, so a 941X is an amendment to a payroll tax.
So I think they do their own.
I mean, I would not recommend it. I would definitely use a software program or like a firm, to like help file those things.
I think that's what they're asking.
One of the pitfalls of filing it yourself is that you don't really understand all of the nuances and triggers that it causes in the background. It's not just refiling that return. There are deadlines, there are penalties, potentially interest if you adjust something the wrong way. So you really want somebody for whom it's their expertise to take care of that for you.
100%. Yes, for sure.
So,
Payroll gets complicated.
Yeah. So the answer is probably don't do it yourself.
Don't do it yourself. I would not recommend it. Yeah.
Just out of curiosity, though, if you're handling your own payroll, can
Well,
you have someone file that for you if they're not handling your payroll?
Well, nowadays payroll is all done via software. Like the payroll rules are way too complicated. So, I mean, gone are the days where you could do it on pen and paper, or pencil and paper, I guess, which is how I learned a long time ago. I mean, you have to use, software, obviously. So, and there are some really great programs out there. So, you would file it all through there, and then through the software is where you would do amendments and whatnot. But yeah, you should definitely rely on, especially when it comes to payroll. That is definitely something that no one should really handle on their own, because payroll is complicated for many reasons. One of them is because not only does it touch on tax law, but it touches on employment law as well. Yeah. And so it's sort of the perfect storm where a lot of things can get really screwy really fast. Mm-hmm. You also have regulatory issues of, what we were just talking about earlier, Keela, on registering with different states and whatnot. I mean, so it can have ripple effects throughout your organization. So it's definitely something that you want a professional to handle. It's yeah.
Agreed.
I thought we were done with the employee retention tax credit, but we're not. So one more question from the audience is, if you filed for it, but you didn't get it yet, do you need to wait on that before you can file your taxes this year? No.
I mean, I'll put a caveat to this. No, you don't have to wait. It could cause either an amendment or money that shows up on this year's income and expense report that's reflected in next year's return. So no, you're not automatically having to put a stop to your taxes, but you do want to let your tax preparer know that this is outstanding so that they can advise you on what would be the most appropriate next step for your situation.
Great. Manny.
Yeah. Well, and then that goes to how you're filing your taxes. Is it on the accrual versus cash basis? Those famous terms that everyone, doesn't like to hear. But, how are you filing your taxes? Again, great conversation to have with your tax professional to figure out the answer to that question. And that would probably affect that as well.
I saved the last question we have time for our last couple minutes, because I think there are a lot of people who are just starting a brand new business. They have very little income. This person says they have less than $25,000 in revenue so far this year. But they want to be sure that they're planning accordingly. So what is your advice to a very small business who might be tempted to not even worry about their taxes right now because they're just barely, getting started and their revenue is very low? I'll start with you, Keela, and then I'll come to you, Manny, in our last 2 minutes. What is your 1 minute of advice, Keela, on someone who's just starting and very small?
I would say 2 things. The first thing is remember that you're taxed on profit, not income. So if you're making $25,000, but you're spending more than you make, you're likely not going to have a tax liability associated with that. The second thing I would say, and this is going to be dependent on a whole bunch of situations, if you use a round number of about 30% of your profit is going to go to some kind of tax. So what I generally recommend is that you open a separate tax account. And when you're doing your weekly bookkeeping and reconciliations, like Manny recommended, what is left over for profit at the end of each month, you just kind of move over to that tax account. It may not break even for you, but it'll go a long way in avoiding a lot of the crazy surprises that come at the end of the year when you haven't put anything to the side.
That's excellent advice. Thank you. Manny, you get the last 60 seconds for your advice.
Yeah, so totally agree with all that for sure. You're taxed on profit. So, and if you have a loss, you can carry that forward and whatnot. So definitely make sure you're doing that. Also, if you're small, just starting out, this is a really great time. It's perfect to start a relationship with a professional accountant. Get your tax accountant on board, get a bookkeeper on board so that you can start having these discussions. It's going to cost you hardly anything because you're really tiny. There's not really much we can do, but we're seeing you start from the very beginning. And that is so important because hopefully you are going to be growing and you'll be growing fast and we can go right along with you. So let's start the conversation now.
That is the perfect place to end this conversation. I want to thank you both so much, Keela and Manny. I really appreciate you being here. I hope we get to do this again soon, but I also hope you get through tax season and then you get a little break and enjoy the summer. So thank you both.
All right. Take care.
Take care. Okay, audience, we are shifting gears, and the next part of our conversation is going to talk about what you can do now to prepare for next year's tax season and the coming tax seasons in the future. We will share best practices for securely storing and collecting your data. So my next guest is Christopher Whitaker, principal of the information governance team at Iron Mountain. Chris works with business owners like you all in the audience on how to protect their data, and he's here to share his advice and strategies with you. Hi, Chris.
Hi, good afternoon, Jeanette. Thanks for the time.
Thanks for being here. And audience, again, please put your questions for Chris in the right-hand side of the screen, and I will ask them of him in a little while. So Chris, you heard all of the advice from our 2 accountants. You're thinking a little even further in the future for our audience, just about how they can be managing their documents and their data for both tax preparation and security reasons. So just what are some of the most common tax process problems that small business clients have when they come to you?
Yeah, so there's a couple, Jeanette, generally that I see. One of the biggest ones, or one of the biggest issues or questions we get or problems that I see is how to distinguish managing between electronic records and paper records. And generally speaking, most of those, I guess, records are defined by and managed by content. What kind of record is it versus format? And generally speaking, you'll see the retention or record keeping requirements are the same. So if I take a paper document, scan it and make it a digital document, or if it's born digitally where it never was created in paper, they have the same retention requirements and retention periods. So I see often where a number of clients might try to keep both, thinking that they're managing both records, where in some cases they don't have to. The other one I see in terms of problems that I see is actually how long to keep records. Every jurisdiction and every industry is a little bit different in terms of record keeping requirements. So that's something that I generally see. And one of the biggest I see is keeping multiple copies of the same record. Again, in most cases, we're seeing where an electronic version of a record is essentially the record, and you don't generally have to keep both paper and an electronic version of a record. Just sometimes keeping both one increases your storage costs. And also in terms of your record keeping process, can also pose some level of risk when you think you've disposed of records in paper forms, but you still have them in electronic form or vice versa.
I want to go, before I get to my next question, I want to go back to something you said at the beginning of your answer, because I want to make sure that I understood it and our audience. So I think you said that laws or rules or best practices around how long you keep data is based on what the data is, not what format it's in. And so am I understanding that correctly? So I think you're saying it doesn't matter if it's on paper or it's electronic, it matters what is actually in the data that you're required to hold on to. Is that what you meant by that?
Correct. And the type of record, that's right. And the type of record, again, and not the format. So generally speaking, when you look at records retention, rules, so again, keeping tax records, keeping personnel records, whatever they might be, there's not generally a provision that says, well, you keep it in paper 7 years, you keep it in electronic 5 years or 7 years. It's generally one retention period or one record keeping requirement, because it is essentially the same. The only difference is the format, again, paper versus electronic form, but the content and the type of record is the same. So that's where the record keeping requirement would generally be the same.
Yeah, I just think that's interesting because I'm not sure people think of it that way. What, in terms of, we're talking, obviously you and Iron Mountain, you're working with customers all year long related to taxes, but also related to all of their record keeping. But today we're talking, specifically about taxes because it's tax season. So what are some of the biggest tax mistakes you see small business owners making in terms of their data retention and organization and how they store it? What do you see, and what are you often advising them to correct?
Yeah. Again, really just one of the general things we see, again, is not understanding the record keeping requirements where, the business operates. So again, if a business operates in multiple states, they may have in general some record keeping requirements that might be different based on the jurisdictions. Again, trying to, decide how they keep records based on format and not the content of the record. Again, this is one I often see. Again, as we just mentioned, the record keeping requirements are the same, whether something's in paper form or electronic form. One of the other things we're seeing too, or one of the other things I've seen as well, is not having a sort of a business continuity or backup plan for your records. Again, especially on the electronic side, making sure that information is backed up in the event, there is some catastrophe or that happens with the business. You got your information backed up. And generally, in some cases, a couple of places where you're able to go back, grab that documentation and recreate some of the business process you may have had before. So that is something that I urge and speak with clients about, is to have a backup plan, for your information and for your records.
I was going to ask you about that before, because you were saying you don't necessarily need it to be both digital and on paper. And I was going to say, I think some people feel like the paper is a good backup version in case they have a security issue or lose data. So you're saying, I think, that you can have the data backed up, but it doesn't necessarily need to be on paper, that you can be backing it up to a server or to a thumb drive or anything like that.
Yeah, that's correct. And especially now with more of the providers, a number of providers that now sort of provide some of the cloud-based backup and storage, options, again, to have your information, again, out of your building, it's in the cloud, but it's safe and secure and available. Again, the biggest thing is that it's not on the company's premise. Again, should something, that server that was housing information for years, God forbid something should happen, at that building or location, where all of a sudden that information is gone or it's compromised. Again, we're seeing, again, just having a plan for where else that information could or would potentially sit, in the event of some type of catastrophe is always a plus, again, to make sure you've got that information backed up. And again, we're seeing just so much more in terms of the cloud and that technology sort of, having taken off. And again, just a lot more secure, and just a lot more options out there for how to, back up and store your data.
Yeah, can we talk about that a little bit more, about some of the lower cost options for folks? I think you were mentioning that their service providers, their software as a service providers themselves will be offering a backup option. But what about using a third party for backing up your data? Is that an option as well?
Yes, that is. I guess generally speaking, I guess as a consultant, I sometimes try to be a little impartial in terms of some of the providers out there, but there are a number. If you do some searches or speak with, any of the, some of the technology providers out there around, backup services, electronic storage services, they can, potentially recommend a number of different tools that are out there, to be able to do that. But yeah, there are a number of platforms and a number of services who provide, again, this sort of third party hosting of records, both, not only from a backup and disaster recovery perspective, but just overall management of your electronic records. So depending on the size of the business, if you have internal resources to be able to, internal IT and technology support to be able to go out and buy a system and implement it in-house. Some companies have those resources, some don't. So the ones in some cases that don't elect to, go with more of a software as a service and technology as a service, kind of approach, because again, you don't generally need a lot of the internal resources to implement those kinds of systems. Again, the third-party providers can store the information. They keep up with the technology to store it. The backup plan for where that information will be located. They also essentially just make the information available. Again, you would typically have some type of login or process to access the information remotely. And that's really, in terms of the client, that really would be it. Again, you wouldn't have to do much more than that to be able to manage that information. You can work with them about retention. Hey, for various categories of records, hey, I like to have a 5-year retention for these records, because their tax records have a 7-year or whatever, period, retention period that you're using. So all of that can be managed within the system, by a third party. Again, which, for a small business, or some businesses, even medium-sized businesses, like that approach, to not have to manage that in-house, especially if they don't have the tools and resources.
Yeah. One of the things I talked to Manny and Keela about is the change in a much more remote workforce and how it impacts taxes. But that's actually a really interesting development in your world as well, because when we all worked in a central office, we had filing cabinets and just places that we stored things. Everybody knew where you kept the employee reviews when they were done, or whatever it was. So are you seeing a change in the way businesses are having to figure out how to navigate a centralized place to store all of their data, I guess digitally, because it doesn't make sense that you would be mailing paper documents. So just what is that? How has that changed the world of storing documents?
Yeah. Jeanette, has changed it a lot, especially obviously with COVID-19 and everything that's happened with that. And as offices and, organizations, went more and more remote, they had to have a way to be able to access information. So of course they couldn't come into an office and, to your point, walk down the hall to that filing cabinet and go in and pull out those paper documents and make a copy, or maybe, scan it, to, their own desktop to be able to have it electronically. So we're seeing this larger migration to digital and digital services from paper. Again, so organizations have a way to manage that information, again, in a digital format, manage it, anytime, anywhere, to be able to, again, have access, to that information across the various groups. A couple of things that I've seen with clients that are doing that is really coming up with a larger plan and a strategy for how they do that. It's typically a phased approach, maybe looking at, records that are accessed the most, or, the largest populations of records, again, the most impactful business records, to actually migrate to more of a digital strategy, again, so that they're, able to be, reached and accessed, remotely. The other thing that we typically see is with clients is instead of trying to go backwards, meaning saying, okay, we're going to take all the paper records that we have today and digitize those, which in some cases, depending on the volume of that, can be very costly and a much larger work effort. We see clients, just saying, hey, what, we're just going to draw a line in the sand and use more of a go forward approach. So hey, from X date for these types of records, we're just going to start, digitizing those and making them more available digitally. The third thing is also seeing organizations implement technologies that have more of a workflow sort of built into them, that actually the information that's created never really sees the light of day as paper. It's created digitally, or it's born digitally, as others say. To where you're just creating less paper, so things like DocuSign, for example, we're seeing where, hey, you can send a contract to someone, it gets signed and or it's other documentation that needs to be signed. One person would sign it, it gets routed to another person to sign. Again, it creates that it creates an electronic version of that document that can be stored and accessed. And again, and it never really sees the light of day as paper. So again, we're seeing a huge shift in terms of going more and more digital.
Right. We have actually a lot of audience questions coming in, so I'm going to get to those in a moment. But I just wanted to get you back to tax season for 1 minute and just ask, if you're a person who's seen the positive in the tax deadlines and saying, this is my chance to start over and be ready next year, what are your top line 3 pieces of advice for a business, especially a new business, that they can start doing now with their documents to be prepared for next year?
Yeah. The first thing I would say is to really understand what your records retention requirements are for where your business operates. Again, every state can have a little bit of a different requirement around record keeping. We generally see 7 years for tax records. I've seen for some companies I've dealt with, they keep them a little bit longer just because of the potential audit requirements or audit concerns that could happen. So I've seen some keep them a little bit longer. So again, it just depends. The other thing is if you do build a retention policy or retention plan, the biggest thing is I can say is actually act upon it. Act upon that plan. Hey, and for those records that you really truly can dispose of, your policy sets forth that you're able to do that, and it's a good best practice to actually go ahead and do that and dispose of those records. One, they lower your cost to store records. In addition, it potentially, it to some degree reduces the amount of risk those records can pose. Of course, if they're not, now, of course, with those records, not under any kind of legal or tax or audit hold or anything like that. But, of course, you'll have to do a review of those records as they come, available, or they are become available, or they've met their records retention record keeping requirements to be able to dispose of those records. And I also recommend to firms, at least once per year, to take a really good look at the inventory and what you have, and everything from the date of the records, have good information about those records, again, including the date, obviously types of records, retention period, so that each year you can take a look and see what can we actually dispose of. Hey, if I've got tax records going back to, the year 2000, or, again, and they're not under any tax or audit holds or any legal holds, things like that. And just get into the habit every year, at least once per year, to go through those records and potentially dispose of them.
I think that takes us to our first audience question, and maybe you answered it, but maybe you can add to it. What are the logical first steps of starting to transfer from physical data storage to digital?
Yeah, so I think one of the logical first steps is just to understand what you have. What types of records are you talking? Again, in terms of historically, they may have been in paper form. Again, and just to understand what you have out there, and to work with the various departments and group within the company to understand those records that they have that maybe pose the most risk, or their records that need to be accessed the most. Again, and really understanding what you have, and then again using kind of a phased approach to go at sort of how you want to migrate to digital, because in some cases, it can be very costly to do that, to be able to say, hey, we want to just do everything digitally going forward. Again, what about our legacy records again, or our old records? Hey, they're in paper form. Hey, would love to have those in digital form too. But again, to convert that, scan it, depending on the volume, might be costly. And in some cases, there may be records that you actually could have purged because they've met their record keeping requirements. And instead of purging them, all of a sudden you take those records, convert them to digital. Now you've got both paper records and digital records that are old and could potentially be purged as well because of the record keeping requirements. So, again, I would say take a really good inventory of what you have, understand what you can dispose of first, and then start to kind of in a phased approach, start to, kind of list those records again that are sort of most impactful and those records that, just absolutely makes sense to have in paper. And then also think about any other records that you can, from a process perspective, have them in more of a, like using workflow tools again, and using software that creates an electronic document, again, like DocuSign, again, as an example. It's a perfect example of something where in the past, companies may have signed paper documents and then scan them. An electronic signature using DocuSign is essentially the same. But the great part about using a DocuSign system is that you've now created it electronically. Then you can store it and you're not having to worry about the paper.
Yeah. This brings us to sort of a couple of audience questions we have here that I will combine. I guess the first is, if they're saying, can you kind of specify the different kinds of records that you would be wise to store locally, and then the kinds of records that it might be okay to let the vendor store for you in the cloud?
Yeah. Based on my experience, I've seen clients store a number of different types of records. They've not generally specified what they stored on site versus what they stored off site. I've seen everything from, financial records to HR records to other types of records stored, off site or with third parties as well. So again, I think the key is just to understand, again, the records requirement, the types of records that you have out there. Again, because we are seeing, and some of the vendors, again, the security and making the information available, again, is much greater than what it's been in past years. Obviously with a heavy focus on security and obviously with what we're seeing and happen today with breaches and things like that. But again, just making sure that information is a lot more secure. So generally, I've not seen where clients have really, in some cases, they may not move all records, but it generally wasn't a determining factor in terms of what they had on site versus third party.
You mentioned security, and I have questions from the audience about security, like how can they trust that these vendors are going to keep their documents secure? And I was sort of thinking the same thing, but then it occurred to me as you were talking that the reality is that one of these big companies whose only job is to keep your data secure is probably likely to do a better job of it than the average small business owner who is not an expert on cybersecurity. But do you have any thoughts on that security issue?
Yeah, that's a great question. A great topic. To your point, those companies who do this type of cybersecurity service day in and day out, they are generally the experts around, the best types of, sort of security parameters and how they keep the information secure, because it is what they do day in and day out. And in some cases, for some of the largest companies in the world, and then inversely, some of smaller organizations, they have, wonderful processes in place for how they keep the information safe and secure, following the various, industry requirements and best practices for how they would keep that information secure. So I generally don't do as much work on the cybersecurity side, but have seen and worked with some partners where, they have wonderful processes in place for that.
I actually misread this question at first and made it into a question that I actually want to ask myself. So this person asks, how long do businesses need to keep receipts for deductible expenses? So I don't know if you know the answer to that.
Yeah. Receipts for deductible expenses.
I know that's not really your area of expertise. I was going to ask, what I thought the question was, have you seen any good tools for allowing people to digitize receipts for deductible expenses? Because keeping that folder of all of these loose receipts, do you see people digitizing that at all?
Yeah, in some cases, yes. But I would say in terms of the retention requirements, as receipts, for expenses would be financial records, I would say at least a 7-year period for those. Again, depends on the jurisdiction in question, depends on, again, where the company operates. It also depends on the company's sort of take on, uh, hey, we may need those records in the future. So, hey, we might keep them a little bit extra, a little bit longer than generally required. So again, I've seen 7 years, I've seen 10, it just kind of depends on the company. But generally speaking, in most jurisdictions, sort of, financial records like receipts, things like that, would generally carry about a 7-year retention.
Our last question in my last minute or so for you is from the audience. What is your favorite technology tool for very small businesses looking to keep track of their data digitally?
Wow. As I mentioned, again, being a consultant and I try and working for Iron Mountain as well, I try to be a little bit impartial in terms of, I guess making recommendations, things like that. But again, as I mentioned earlier, there are a number, if you do, a couple of searches out there, there are a number of tools out there to manage, data and especially, again, I would say this, where I am seeing the growth and where I see most clients and where historically, again, when I was, um, a data manager or records manager in the financial services industry, I started seeing more and more of the cloud solutions come into play and more cloud solutions, out there, just because, again, just all the other benefits. Again, we were able to outsource it, which lowered our costs. The technology and all the other processes behind was really up to the provider. Again, I didn't have to have as many resources internally to try to provide those services and manage that information myself. Again, doing more with less, so to speak. So I was able to outsource that, and it just made sense for us to be able to do that. So I hope that helps. But if
I
you
think
do
it does. Yeah. And I think that's actually just about all we have time for. So I want to say thank you to you, Chris, and thank you to Manny and Keela. That was a lot of good information. I wish the audience luck in the remainder of this tax season. Thanks to everyone. Thanks to the audience. And I hope you will join us for our next Start, Run, and Grow coming in April. And that's it for today. I hope everyone has a great day. Thanks so much.